Hey everybody, welcome back to the Thinking Crypto channel. I have some very big updates to share with you all. We're going to talk about, is Bitcoin moving towards $40,000 and upwards? Have we found a bottom yet? Or is this just another fake out in the multiple V-shaped recoveries we've been seeing lately? And I'm going to talk about that in addition to Jamie Dimon and JPMorgan are looking to hire more people who have experience with cryptocurrencies. While Jamie Dimon continues to trash Bitcoin and crypto, they still are building and creating their Bitcoin fund for wealthy clients, trying to hire people with crypto experience. So classic smoke and mirrors move here. And Argo blockchain, which is a Bitcoin miner, has mined a significant amount of Bitcoins, and I'll talk about that news. And in addition, OKCoin, the exchange that I work for, has made a major update. We're going to go through all of it. Please go ahead and hit that thumbs up button, leave a comment below, and hit the subscribe button if you're new here. It helps support the channel and it doesn't cost you anything. Guys, I have a free weekly newsletter. It is 100% free. You don't have to pay anything. All crypto insights and knowledge. Be sure to sign up, link in the description. So, OKCoin has the lowest fees around out of all the exchanges. Save your money, guys. Why pay ridiculously high fees? You know, if you're buying Bitcoin, Chainlink, Ethereum, whatever it is, go ahead and use OKCoin. Once again, I work for them, and they actually made this really great update here. And by the way, if you want to sign up, link in the description. OKCoin integrates with Polygon to reduce users' Ethereum gas fees. So this is awesome, guys. I love when exchanges are catering to users and making things cheaper, obviously the lowest fees, but also helping with the ridiculous Ethereum gas fees that we've been all aware of and complaining about, right? The gas fees are just crazy, ridiculous. So the move lets users skip depositing to an ETH wallet, saving the associated fees. So let me give you some more details here. The cryptocurrency exchange OKCoin has integrated with Ethereum Layer 2 scaling project Polygon to allow users to directly access the decentralized finance DeFi ecosystem without using an Ethereum wallet. The function of the integration is to allow users to avoid skyrocketing gas fees on Ethereum, which have gotten so high they are pricing some smaller players out of the burgeoning DeFi space. Users can now withdraw any of the 13 available trading ERC20 assets, including ETH, UNI, USD, and Link Comp, and more, from their OKCoin wallet to Polygon's sidechain. In doing so, users can save up to 25% on gas fees because they no longer have to bridge their assets from an exchange to an Ethereum wallet to Polygon, incurring 2 transaction fees for using the token bridge. So another reason to sign up with OKCoin, guys, the link in the description. So the market here, Bitcoin is around 39,000. It seems to be making a move towards 40,000. And as we've always discussed when we talk about the market, we want to look at this from a factual standpoint, from a data standpoint, not emotions. Bitcoin moves the market. Bitcoin moves upwards, the altcoins follow. You have alt season, Bitcoin moves downwards, the rest of the market follows. So here we're seeing on the weekly chart a green candle here, and it looks like we're going upwards. But we got to look at things holistically. Could we keep going sideways or even go down a little bit more? That's certainly possible before a breakout upwards. Now, you may say, well, why would we keep going upwards? Well, we are in a bull market, guys. And if you look at the macro level charts like the stock to flow model, it shows we still have ways to go. So I think we're going to see a breakout sooner than later, and we'll see when that exactly happens because nobody can predict that. Now, something that's of interest here, I thought it was, from Bloomberg, they said discounted Bitcoin more likely to hit $100,000 than $20K in 2021, says Bloomberg analyst. Bitcoin, here's a quote, Bitcoin $20,000 or $1,000 in 2021. Crypto uptrend is upward, wrote a Bloomberg senior commodity strategist Mike McGlone. So indicating there's still another leg to go in this bull market. And I agree with that. The data speaks to that. So it's not, okay, I'm wishful thinking or this is how I want it. Rather, what does the data tell us, right? And the stock to flow model is pretty close to that. Obviously, it's not 100% perfect. There's no model like that, right? But using historical data and patterns and there's stock to flow models for gold and so forth. So using that same model, you can see here, there's still more ways to go in this respective bull market. Then there will come a bear market. So yes, it's not going to keep going up forever, and there will be a top to this market. So you want to make sure you're cashing out in phases on the way up, because no one can call the top as well. Now, here's the JPMorgan news of the day. Our friend Jamie Dimon, the scammer of all scammers, I should say, the king scammer, the smoke and mirrors move guru. JPMorgan job post hints at bank's broader cryptocurrency ambitions. The mega bank is on the hunt for its first crop of crypto-savvy employees. Experience with Bitcoin and Ethereum is a huge plus. Oh, you don't say. But I thought Jamie Dimon said, going back to 2017, Bitcoin's a scam, a Ponzi. Here's a headline from 2017, guys, September 2017. JPMorgan CEO Jamie Dimon says Bitcoin is a fraud that will eventually blow up. Here's what he said. Actually, let me read this other one. It's worse than tulip bulbs. It won't end well. Someone is going to get killed, Dimon said. Oh man, so dramatic. And we know the game he's been playing, right? Smoke and mirrors to shake out the noobs, and they are accumulating. What did they just talk about a month ago? They're launching a Bitcoin fund for their wealthy clients. What were they doing while Jamie Dimon was funding Bitcoin back in 2017? They were building JPM coin, using the crypto technology, the blockchain technology to build their own coin. This guy doesn't want you to put your money in Bitcoin and crypto. He wants you to either go through JPMorgan to buy eventually, or to invest in JPM coin or things that they have a stake in, right? That's the game he plays. And we've seen their analysts have been putting out reports on Bitcoin. And, after last year's all around market crash, they said cryptocurrency is here to stay. And we see all the hedge fund managers, the billionaires, the different banks, stock exchanges are jumping in. And he's still trying to FUD crypto, right? So JPMorgan Chase & Co. is on the hunt for crypto-savvy candidates to fill a growing number of digital asset crossover jobs. The planned compliance, regulatory affairs, and payments positions appear to stretch beyond JPMorgan's well-documented and aggressively hiring Onyx blockchain project, an effort mostly concerned with wholesale banking. Instead, the 6 positions, which have been hitting JPMorgan's job boards since at least April, speak to a financial services giant bolstering its crypto readiness on multiple fronts. Yeah, anybody with a brain can see what is happening here. Now, the dumb money, right? The dumb money crowd, the noobs who read headlines, who listen to CNBC Fast Money without doing their own research, that JP Morgan's going to pull the wool over their eyes, right? He's going to do it. You and I, who are well versed and understand and research and pay attention to this closely, are not. We're not going to fall for that, right? And his nonsense. So together, let me back up. The positions at the 255,000 person company range from New Jersey to Illinois to Hong Kong. Together, the prospective hires add some weight to JP Morgan's gradual turnabout on digital assets. After years of CEO Jamie Dimon bad-mouthing Bitcoin, the bank, which has never explicitly confirmed previous CoinDesk reporting that it was launching a private fund, has begun laying a broader foundation for the crypto space. Representatives of JP Morgan declined to comment for this article. So, we know the game, guys. They're playing it pretty clearly here. But once again, you and I, who are paying attention to the details and watching the job listings, the average man who's reading headlines and things like that is not going to catch this, right? So this is very interesting. So crypto's most tantalizing JPM flirtation could be its status in consumer payments, merchant services. The firm's $1 trillion plus annual transactions payment processing operation is assembling a new payments method team that will look into crypto tie-ins. Of course, this is the new asset class on the rise, the disruptive technology. You better get on board and innovate, or you will become like Blockbuster. You will go out of business. They know this, but of course they don't want everybody buying in. They want to get in at the low prices. Can you imagine, Jamie Dimon, I think, when he makes certain statements, I think he's trying to drive the price down so he can get in at even lower prices and getting lower prices for his clients, because they're going to start their Bitcoin fund for the wealthy clients, right? So here's some more details. The team's vice president would gain early senior leader support and execute strategy for prioritizing, approaching, and signing highest impact third-party relationships to enable product strategy surrounding new payment methods. For example, buy now, pay later, pay with points, cryptocurrencies, etc., according to the job post. So the wealth management, corporate banking, consumer payments, and investments conglomerate is also adding a pair of cryptocurrency risk managers. Now, why would you need that if crypto's a scam? If Bitcoin's a scam, right? Again, smoke and mirrors. To its corporate compliance ranks. According to these job posts issued last week, these officers will identify, manage, and mitigate risks associated with digital currencies across multiple business lines. If you're not participating with cryptocurrencies, you have nothing to worry about. But they will be participating, right? They will also need to understand the ever-changing crypto regulatory landscape. Diamond called that a serious emerging issue in his April shareholder letter. He has reportedly warned off and even called for a closer regulation of crypto in the US. So we see what's happening here, guys. Don't listen to Jamie Dimon. If you are, I suggest you go do some research and start looking at this guy's history. Everything's on the internet now, and look at the statements he's made. And you will see also the manipulation of silver, what they've done there, and other asset classes. So, of course, they want to get a grasp on this. They don't like that they don't have control. They want to keep making money, right? And fooling the public. So, Jamie Dimon, he's a fudster. Don't fall for it. Watch what they do, not what they say. And these job listings are telling what they are looking to do, right? Now, Argo blockchain's Bitcoin holding passes 1,000. May revenue fell to $7.8 million, 16% less than the month before. Of course, the price of Bitcoin dropped. Everybody's portfolio dropped, right? But the fact of the matter is, these folks they keep mining, they keep investing. So Argo blockchain said that it mined 166 Bitcoin last month, taking its total beyond 1,000. The May figure compares with 163 in April. The London Stock Exchange listed company said Thursday. So they are listed on the London Stock Exchange, guys, and that's a mining company. That's pretty bullish, right? And you're going to see more companies go public, get listings on different stock exchanges. So the firm announced its execution of a grid interconnection agreement with the Wind Energy Transmission of Texas, WETT, and American Electric Power, AEP, for 200, megawatts, if I'm reading that right, at Argo's mining facility in the Lone Star State. The facility is expected to connect to the Electricity Reliability Council of Texas, an organization that manages the state's electric grid, in the first quarter of 2020. So you see the expansion here, guys? You see what's happening? They're not worried about this pullback in the price. They know what's coming. And the more they accumulate, and it looks like they're hodling, obviously they sell some probably for to pay their expenses, but you can see they are hodling. They have now 1,000 Bitcoin. And many of these different miners are doing that. And friendly reminder, I will be interviewing Fred Thiel, who is, of course, the CEO at Marathon Digital Holdings, another stock exchange listed company that is mining Bitcoin. We're going to talk all things Bitcoin. Elon, Michael Saylor, the Bitcoin Mining Council, what he's planning to do in the United States. So you don't want to miss this interview, guys. This is going to be really good. I've got some great questions lined up. And if you have questions, leave them in the comment section. So guys, what do you think? Do you think Bitcoin is breaking out here to 40 and then we could make our way upwards? Or could we move a bit more sideways or go down a little bit more? Also, what do you think about JPMorgan? The classic smoke and mirrors moves, they continue to do them. But be glad that your eyes are open to this. You're not following just media narratives, right? And that's how these guys play. This is how they do it. And it's not just JPMorgan. We've talked about Mr. Wonderful from Shark Tank, Mark Cuban and others, and many other hedge funds. These guys go on TV and they say one thing, and they're trying to move the market in one direction for their shorts or longs, whatever it may be. So leave your thoughts and comments below, hit the thumbs up button, share this video, and I will talk to you all later.